Here's what's coming up on Beacon Retirement Strategies.
We are doing that with people every single day in our office here in Middle Tennessee at Beacon, helping people become tax efficient and tax smart.
As you approach retirement, it's a good feeling to be debt-free, and that might be something that you want to consider. However, what you're going to want to look at is what is the current interest rate of the mortgages you have? Is it a fixed rate? Is it a fairly low rate?
It's getting the information, and most people can do enough to be significant. And over time, if you do a little bit each year or some each year, over time they've built up a really good amount of tax-free money.
Tax-free.
It's going to be their favorite money in retirement.
And now the hosts of Beacon Retirement Strategies, Pete Benson and John Maxson. Guys, we got a great show planned up for this week.
We do. There's 30 minutes of power-packed information just for you.
So don't go anywhere. The show starts right now.
Hi, this week on the Roundtable, we're going to be talking about tax-efficient income strategies. And I think, John, we have to start with the Roth, right? That's our starter point. Tell me more about that.
Yeah. Well, you know, Roth IRAs and Roth Conversions and Roth 401ks, so there's several that you can look at. But we believe that paying taxes on today's rates for most people and getting tax-free growth is an important aspect of management or planning your financial future. So Roth conversions are, if you have money in a 401k, you can actually convert to a Roth IRA. You know, you're going to pay taxes on that money when you do that, but all of the growth on that money for the rest of your life will then be tax-free.
Doesn't matter how old I am for this.
Doesn't matter how
old you are.
There's
no age, 59 and a half, 70 and a half. None of these things come into play.
In fact, if you have the money that you have in a Roth IRA, when you get to now age 72, you don't have to take required minimum distributions out of a Roth IRA. Okay, so there's Roth conversion strategies, there's Roth IRA contributions, and whether or not you can do that is going to depend on your overall household income. Some people don't qualify for that. And then there's kind of a third one a lot of people don't know about, that regardless of what your income is, your household income, if you have a Roth option as part of your 401k, it's called the Roth 401k, you can actually put money into a Roth 401k regardless of your household income. So there's lots of strategies to take advantage.
Why wouldn't you take advantage of a Roth 401k if that's available?
Yeah.
Why would you not take advantage of that?
Education. People aren't being told that that's a good option, and more companies are providing them. Our company at Beacon, we provide it for our employees, and they can put part of it into a 401k if they want, defer the taxes, and part of it into a Roth 401k, or 100% to each, and they can change that each and every year. Another misconception that people have is that, well, I make too much money, or I heard that I can't do a Roth. Anyone can do a Roth conversion, and anyone can, if it's provided, open and put money into a Roth 401k.
So is there a limit to that, though? Is there a limit how much you can transfer over? You know, we talked about I make too much money, but is there, like, I can only convert X amount of dollars per year?
You can convert as much as you can tolerate having to pay the taxes.
There's going to be a
so
tax.
There is no limit there.
Okay.
But there are limits in, you know, putting money into a Roth IRA and how much you can put into a Roth 401k. But again, it's getting the information, and most people can do enough to be significant. And over time, if you do a little bit each year or some each year, over time they've built up a really good amount of tax-free money.
Tax-free.
That's going to be their favorite money in retirement.
So the thought process here is chances are, potentially, taxes will go up in the future. So we have this window of opportunity, John, right now, that wasn't here 5, 6, 7, 8, 10 years ago. So you may have considered a Roth at that time, but for whatever reason it didn't make sense. But it may make sense now.
Right. Well, let's talk some math. And this is just our opinion, but we believe it's well-founded opinion. We have a $22 trillion debt in this country. I think that's a number sometimes that we don't realize how enormous that is. And I'm pretty sure the federal government is going to pay their bills. And the federal government pays their bills through the taxpayer. So the federal government really has two choices to pay a $22 trillion debt. Okay, Mark, if you were a betting man, which of these two choices would you bet on? They're either going to increase taxes or cut spending. Okay, well, I'm taking the bet that they're going to increase taxes.
Yes, I'm
And
taking
so
that bet as well.
If I also understand that top marginal tax rates in the United States today are the lowest they've been all the way back to 1913. We actually have a graph in our office that we show people. So if taxes today are historically low, and mathematically, we're pretty sure they're going to go up based on the sheer size of the debt, and I had a limited opportunity to be able to influence that for the rest of my life, I want to take advantage of that.
John, Pete, thanks so much. Hey, are you taking advantage of potential tax strategies for you and your family? Hey, pick up that phone right now and give us a call and set up a visit. Or go to our website. Don't go anywhere. We'll be right back. You're watching Beacon Retirement Strategies, Nashville's retirement television.
You know, John, one of the things I love hearing around our office from clients is that they love the full-service, comprehensive approach that we have.
Well, it's been a game changer for our clients and for prospective clients because they can come to one place and meet with all these guys.
Yeah, I've found that clients find a lot of value in the estate planning area, having the opportunity to meet with a tax professional or a financial professional all in the same room most of the time. It allows us to set up a more thorough plan for them.
And they have a lot of questions about health care and that too, Dan.
Now that we have Frankie in the office doing health care, he can do Medicare, he can do standalone plans if you want to retire before the age of 65. That's complicated.
Yep.
There's some great plans out there. A lot of people don't know there are because it's too complicated. Now we have one person in-house that can really research all of those who's fully independent.
You know, the number one thing I'm asked when people come in is what is a tax-efficient planning strategy? And what I talk to them about is how do you get some tax-free assets, whether it's ROTH conversions, ROTH IRAs, other ways of getting tax-free assets. What we're trying to do is make sure that people are able to keep more of their hard-earned money.
How would you like the opportunity of being able to sit around a table in one office and be able to have help all in a good comprehensive plan for taxes, health care, income, estate planning, investments, and all of that? Well, guess what? You can at Beacon Capital Management. Give us a call. We'd love to be able to meet you and help you in any way that we could. 615-436-6000. Give us a call. All of us would love the opportunity to be able to help you and your family.
You're watching Beacon Retirement Strategies, Nashville's retirement television. Hi, and welcome to this week's AskBeaconNow.com, where you email your questions into us and we answer them right here on the show. John, my first question is from Arlene in Lebanon, and she writes, John, I'm looking for a new retirement plan and financial advisor. Please explain to me how in this low interest rate environment you can get good returns without having significant risk.
Yeah, well, I'll tell you, Arlene, that is a great question, and it's one that for a lot of retirees, it's been pretty difficult because interest rates are at an all-time low, and where you would have traditionally gone to the banking system to get maybe a short-term CD or even savings accounts prior to the last correction, you could have gotten 4 or 5%, but now those rates are really anemic, and rates may start to climb a little bit, but probably not significantly enough to where you're going to be able to go to that avenue and get something that's going to keep up with inflation. So that's a great question. Well, there's actually several opportunities. In fact, there's dozens for you to consider. There are things like fixed annuities, for example, which are a little bit like bank CDs. They're not FDIC insured, so they're backed up by the insurance company that you have a contract with. So you want to make sure it's a good A-rated insurance company that has a good solvency rate. But as opposed to some of the banking instruments, you could probably get 3 to 3.5% on something like that. There are things like structured notes, or what we refer to as bank notes. Those are securities. They have risk to them, but they're more conservative risk that you might be able to get 5 or 6%. And then you have things like what we call hybrid or fixed indexed annuities, and what these are, and they come of all shapes, sizes, lengths, where you have your money that is indexed to an underlying stock market index. If that index goes up, you're going to go up with it, but not as much. There's a cap, so there is a trade-off. You need to understand what that is. But one of the other trade-offs is that if the market goes down, you don't lose any of your principal. So there are many options, and really what you need to do is come and sit down with a financial advisor that can inform you and show you what all the options are and pick the investments that are best suited for you and your family.
John, my next question is from Mike in Brentwood, and he writes, We have a small mortgage on our home and we're wondering if we should take the money out of our IRA and pay it off in full now, or just wait and pay it off gradually over the next 6+ years.
Sure. Mike, that's a great question. As you approach retirement, it's a good feeling to be debt-free, and that might be something that you want to consider. However, what you're going to want to look at is, what is the current interest rate of the mortgages you have? Is it a fixed rate? Is it a fairly low rate? And what is the return that your IRA or your other investments are making? And what's the effect of you taking out money out of your IRA? You can do that. However, you're going to pay taxes on that. And so if you were to pay that out of your IRA, is that going to increase your taxes to the point where it's going to put you in a higher bracket? Maybe what you could potentially do is pay some of it off. Instead of it taking 6 years, maybe it takes 3 years, depending on your situation, and you can kind of have the best of both worlds. Really, how you're going to get to an answer for that is to sit down with a financial advisor that can go over the tax ramifications, like our CPA Mark and our team would be able to do that, and really, at the end of the day, show you what's going to be most advantageous for you as you enter into this new stage of your life.
John, thanks so much. And I want to thank Arlene and Mike for those wonderful questions. Hey, do you want your questions answered here on the show? Because we'd love to do it. Keep those great questions coming in. Go to askbeaconnow.com and send us your questions. Don't go anywhere. We'll be right back.
Your tax tip for this week concerns tax planning during job transitions. I've met with a lot of people over the last year who are going through a job transition in the form of early retirement. There are some things you have to consider because they may have tax ramifications depending on your situation. If you're being offered early retirement and there's a severance or buyout package offered, the following ideas might help you minimize some of the tax consequences. First, make sure that you max out your 401k. This is contrary to tax advice that I'd normally give, but it can defer some of the tax liability related to your severance or buyout. You can convert these tax deferred amounts to a Roth or life insurance in subsequent years when your income is lower and you're in a lower tax bracket. Second, if you have the opportunity to make the maximum allowable contribution to your health savings account, do that. Remember, this contribution is tax deferred. However, if the funds are spent for qualified health care expenses, both the contribution and any earnings are tax-free. You should also evaluate your charitable giving and other deductions to determine if there's an opportunity for tax reduction there. I recommend you consult us here at Beacon to ensure that you've considered all your options. That's your tax tip of the week.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
It's your retirement. How will you live it? How will you be remembered?
Will you be able to send me an invitation? Will you be there for my ball games? Will you teach me your values? You'll be able to play with me. Oh, help me go to college. How will I remember you?
You're watching Beacon Retirement Strategies, Nashville's retirement television. Hi, and welcome to this week's Retirement True or False. Guys, I have some wonderful questions this week. John, I'm going to begin with you. Most retirees have their estate plan in order. True or false?
That's actually false. In fact, the estate attorney that we have on our team tells us that statistically, according to the Bar Association and whatnot, that approximately 65% of people in America have no estate plan whatsoever. They don't have a will, they don't have a trust, they don't have power of attorney documents. They've literally built an estate an entire lifetime. They've planned for retirement, and they have failed to protect everything that they've worked for.
Question.
So it's false.
How hard is it to put it together? Because I think part of this is, I'm going to get in there, I'm going to talk to somebody, they're going to see that I'm completely disheveled and I'm a mess, and they're going to yell at me, and it's not that difficult, right?
Yeah, and that's kind of some of the feeling, but the overwhelming feeling is that people really want to have that done. They see the need for it. However, they're not working with what we consider to be a full-service planning firm. So they have their financial advisor in one part of town and their CPA in another part of town, and maybe an estate attorney on the other far side of town. And to try to get constant and consistent communication between those three entities, which is really what you need to do a really good estate plan, is really complex. It requires a lot of time and a lot of meetings. That's one of the advantages and the values that Beacon Capital Management brings to the table, because you can come to our office and we have a CPA on our team. We have an estate attorney on our team. And so you can sit around our conference room table with your financial advisor, your CPA, and your estate planning attorney, all together communicating and collaborating together, and it's much easier to do, and it's not as hard as people think.
Let me ask you a quick follow-up. Let's say that I love this concept, them all sitting around the table, but I really like my CPA. Can I bring my CPA in to sit around the table like that?
Absolutely. In fact, I just talked to a couple about a week ago that said that exact comment. They'd been working with their CPA for 25 years, and they said, we really don't want to fire our CPA. And we said, well, that's great. You don't have to.
Bring them on in.
You know, the more the merrier. It takes a team of people, and so our CPA works in conjunction with the CPAs that people have if they want that relationship to be maintained.
Thank you. Pete, my next question is for you. By the time I've retired, it's really too late to do any tax planning or Roth conversions. True or false?
That's false. And I'm so glad you asked about that, because that is a big topic today. And many people think that they should have done it much earlier. And really, for many people, between the ages of, say, 60 and 70 years old is a perfect time. When you're retired can be a perfect time. It doesn't mean it's right for everyone, but that is a great time to do tax planning. We are doing that with people every single day in our office here in Middle Tennessee at Beacon, helping people become tax efficient and tax smart. And oftentimes it's in retirement. There's really no age where you're too young, no age where you're entirely too old. But again, somewhere between 55 and 75, that's a beautiful time. And that's many of the people that come to see us every single week. There's a lot of things that can be done. And I believe we all need to make that a priority in the next few years, because there's an opportunity. And when it's gone, it's gone. And right now, it's here, front and center.
You know, I'd like to take a minute and talk about the accounting piece under your roof and talk about Patrick for a moment. Let's talk about Patrick for a moment.
Yeah, so he is a tax preparer, but that's a small part of what he does. What he really does is tax planning. You see, a tax preparer, Patrick and his team, they are kind of historians. They look behind the last 12 months and tell you what you owe for that period. But a tax planner looks 1 year, 3 year, 5 year, 10 years ahead and says, how would you like to pay less later if that's possible? And let us put a plan together that will help you do that. And when people hear that, they're like, yes, I want that, but nobody's talking to me about that except you guys.
I think one of the things important about that too is that we believe right now represents one of the best opportunities for retirees to do tax planning that they're ever going to have. And most retirees feel like, hey, I have no debt, I take the standard deduction, and so I can't really do retirement or tax planning. But the truth is, in retirement, a lot of times you can do more tax planning than you could in your previous part of your life. And we think tax rates are going to go up in the future just by nature of the national debt. So there's never been a better time to do this type of planning than right now.
Pete, John, thank you so much. If you want more information about the topics we spoke about here today, hey, give us a call in the office or go to our website. And don't go anywhere. We'll be right back.
Today's Master's Money Moment is about being prepared and having a plan. Proverbs 22:3 says, a prudent man foresees the difficulties ahead and prepares or plans for them. The simpleton goes blindly on and just suffers the consequences. So in this verse, it talks about the fact that a prudent man, someone who really wants to have a good buttoned up financial situation, needs to have a plan, needs to be prepared. And we agree with that. At the Beacon office, we teach that every single week. How important it is to have a plan and be prepared. But the simpleton, it says, goes blindly on and just suffers the consequences. And we've seen over and over and over again examples of people that come into our office that just really didn't have any kind of a plan, that were just winging it, and they were suffering the consequences. So again, we see here again where the Bible is relevant and has great things to say that can really benefit our financial situation. Be prepared, have a plan, This is today's Master's Money Moment.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you'll be able to get a clearly defined income plan is to talk to an independent financial advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you will receive a free complimentary planning review. There's no obligation, no cost if you have at least $200,000 saved for retirement. Here's what you'll receive: a free report to sort through your current fees, a tailored plan to help protect your investments, a tax analysis to reduce your tax liability and increase your cash flow to your family, and a custom income plan to support your lifestyle. So call now for your free, no obligation Beacon Retirement Blueprint.
It's time for a reinvention. It's time to write new chapters in our life stories. Every story includes a middle, where important events unfold. A second act, if you will, where characters learn more about themselves, where people discover how truly different life could be. A reinvention, a retirement. It's time to turn your hobbies into creative businesses, to volunteer using skills gathered across a lifetime, to hit the open road in search of new horizons and fresh faces. It's time to grab those grandchildren and hold them close. Grand adventures. Or simple pleasures. Today's retirement is different. It's not the final chapter in the book of life, but rather a new beginning. A second act.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
This week we're going to be talking about how you may benefit from incorporating life insurance into your estate plan. A life insurance policy is a way to protect your loved ones financially after your death. For most people, when they pass away, their spouse is left paying for everything: the mortgage, utilities, grocery bills, childcare, and medical bills. They may also have to pay personal debts their spouse left behind. When a couple is used to covering these bills with 2 incomes, it's difficult to cover them with just one. Life insurance protects your spouse or other loved ones by providing them with a payment upon death. This is called a death benefit. The benefit allows them to continue covering their financial obligations without having to completely alter their lifestyle. While many people have a small amount of life insurance from their employer, the benefit from an employer policy is normally far below what you actually need. Also, several insurance companies have created combined life and long-term care policies that can cover the costs associated with a disability. As you can see, there are many benefits to planning with life insurance. And that's your estate planning tip of the week.
Well, family's everything. My wife and I actually grew up in the same community, 7 houses apart. Our parents went to the same church, and so we don't remember, but we expect that we met in the nursery at church when we were about that long. So we've known each other forever. You know, like a lot of young people, didn't really know what I wanted to be when I grew up, but I always had a great desire to help people. And so my wife and I went to a small Christian Bible college years ago, and we felt a passion to help get some churches started in areas that the Wesleyan Methodist Church was going to be starting some churches. So In Canada, we actually helped start a church on Prince Edward Island. A lot of people have heard of Anne of Green Gables. It's a great island, a great place, and we started a church there in 1984 that we still get to go back to. Faith is very important in my life. Grew up with parents that were godly, and so did Jenny's parents and the community we grew up in. In fact, our grandparents were part of the church that we were raised in, and so it's always been part of our upbringing, but at some point it had to become personal too. And so every weekend on Sunday, the weekend revolves around we're going to go to church. Not because we have to, because we love to. And every part of every day, there's a certain part of the day that's set aside where we continue to educate and build our faith and grow in our relationship with Christ. And really, it's every minute of every day. That's really what we live for. Faith is central. It's what really steers our life and gives us meaning. And yeah, I don't know how people live without it.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Are you worried that your financial strategy is missing something? Today's retirees and pre-retirees will need to utilize the services of a qualified legal and tax team, as well as a financial advisory firm. The professionals at Beacon Capital Management, Beacon Accounting and Tax Services, and Knight Legal are committed to being your comprehensive wealth and retirement planning solution. And here's the best part. All of these services are under one roof. That's right, let Beacon Capital Management effectively coordinate all of your retirement, legal, and tax planning needs. Our unique combination of licenses, registrations, and specialized education qualify us to work with a wide variety of investments. We can create a solution for virtually every retirement scenario, no matter how simple or complex. Call us today and experience the Beacon difference. Imagine all of your investment, tax, and estate planning questions being addressed around a single table. Call now for a complimentary retirement analysis. There's no cost and there's no obligation as long as you have saved at least $200,000 for retirement. Call us now, and remember, at Beacon Capital Management, peace of mind in retirement requires a plan.
You're watching Beacon Retirement Strategies, Nashville's retirement television. Hey guys, great show this week. Thanks so much for tuning in.
Yeah, and if you'd like more information, give us a call at the office or go to our website.
And remember this, peace of mind in retirement requires a plan.